Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Plenty of data,
Whew.
plenty of activity.
Yep. Roll on Christmas.
Plenty of volatility. So we'll start domestically again. The wage growth numbers came out last week and it's the biggest rise in over 10 years, which it was quite low to be fair, but still I think with the inflation where it is, the higher interest rates, people are yearning for higher wages.
They need it to, everything's just going up, food price, you name it, rental, and rent goes straight into inflation. What's going to be, interesting, Andrew, is that how is this going to perform with more horsepower in someone's wallet than that? It's all about spending, and you're leading into Christmas, and what's going to happen to inflation in the next, 2 to 6 months? Is that number going to stay where it is and become very sticky due to more spending power? Circulation of money.
That's right, yeah. And the Australian inflation rate is quite sticky between that 4.5% and 5% at the moment. So, and you sort of think with higher wages, does that feed
and
inflation?
Higher rent?
Yeah, that's right. And I think with the higher wages, it's really going to the basics, really, like your rent.
Yeah, exactly. Yeah, I mean, it's getting to the point there. It's all about, people aren't spending, and that's not a good thing for any economy. That's probably what the central bank wants, but it's going to be a very, very interesting 24.
Yeah, for sure. Over in the UK, the CPI numbers came out. They dropped 2.1% in the month, which is a massive drop, which you would say, that's great, CPI is coming down. But for such a big drop, that would be a concern, because you would sort of think, how dire is the economic situation there?
Yeah, well, they're worried about stagflation naturally, which is, you're looking at relatively high inflation and negative growth. So that's a dilemma. Do you raise rates further and grinds the economy even further down, or do you keep them where they are and inflation can take off again if you saw higher energy prices? They haven't been put to bed either.
No, not yet. The pound is strengthened, but then again, a lot of the risk on currencies have due to the weakness of the US dollar.
Yep, US dollar came under some real big pressure to the downside. Everything bounced very solidly, and it's been a trader's delight really the last week for currencies. So the Aussies had a good run, as you just saying, as far as the pound's concerned, and even the euro. So yeah, game on, and strap yourself in. It could be a very interesting ride for currency traders for the rest of the month.
Could be. The Eurozone had the CPI out as well. That came down significantly as well.
Yes.
Not surprising, because they are, if not in a recession yet, probably will be fairly soon.
Yeah, I would say so, very much so. I mean, if you look at those lagging indicators, it's. I think we've got to be very mindful, Andrew. You saw 2 weeks ago as far as those export numbers from China. Well, Europe's an export-driven economy, the likes of Germany and so on, with technology and automobiles. Who's buying these finished products? And what's that going to do as far as, naturally, the growth of the economy from GDP? This is where you're saying, looking into, there it is there, looking into the, forward metric. How's growth going to be? I think it's going to be very, very soft.
Yeah, and you look at the GDP numbers there, they're basicly zero or just below zero at the moment, actually. So, and like we say, the chart tells the story.
Well, it does, and that, for all the viewers out there, please pay very close attention to the gold line there, or the yellow, the composite PMI. Anything under 50 is contraction. Well, you're now bordering on 46, so that is bleak. And if you start to get to the 40, 45, 44, that really tells you that the Eurozone's under some major, major problems. And you put your mind back to even 21. It had a nice rally up there, and it was sunshine and game on in early 21, but it's capitulated now, Andrew.
It certainly has. Inflation in the US, we talked about the inflation last week, which came down. The PPI numbers came out late last week as well, which came out quite a bit lower than expected. So the Fed would be happy with that, in that it's getting the CPI down.
Yes.
How much of an impact that will have on the economy long term is yet to be seen.
Well, it was a two-punch combo in the sense where you had weak NFP, non-farm payroll, came out, and then that number was released. So it was what the Fed was after, and that's probably settled them back a little bit as far as Jay Powell and his team. No rate rises are tipped for December. And whether we're going to see another rate rise from the Fed in early 24, people are saying now it's going to be 50 basis point cut in 24, and many analysts are saying could be up to 100. So, it's a toss of the coin where you see that, but 24 is going to be very exciting.
Yeah, and I think those rate cuts, whenever they may come, if they do come, but obviously the equity markets are certainly starting to price that in a little bit at the moment.
Yeah, very much so. I mean, they've had a great rally. This is week 4, and it was a big, New York was very strong overnight. So all of that momentum, and we've just got to see, as we say, we're less than a year from the general election in the United States. Biden's not performing well at all. Are you going to see a change in that last 9-month window, change of batter coming in to, move him sideways?
Yeah, potentially. Finally, the oil that's been pretty whippy in the last sort of month or two. So it's obviously, it's gone up a little bit, but still under a bit of pressure. But the Saudis have come out this week saying the barrel cuts are going to continue into the new year.
Absolutely.
And I think we've got a meeting in Vienna. Is it this weekend?
Yeah, Sunday's the meeting. I think it's a JMMC meeting on Sunday, and then the traditional meeting will take place, I believe, on Monday. I normally attend that one in Vienna. I'm not going this year, and I feel as though it could be a real fireworks sort of meeting, because what the Saudis are prepared to do, and naturally Russia to fall in line and to continue those cuts, that's not really, the word on the street is they don't want that price. They want higher. And it's going to be fascinating again, how hard, as you just said, to roll those production cuts, even to the first quarter and say the second quarter, what impact that's going to have to price. That war premium, Andrew, has been stripped out of there that we saw on October 7, the attack by Hamas on Israel. So that's just evaporated. So, where's the floor going to be, and where are we going to see, the price over the lead up to Christmas?
Yeah, I think it's probably fair to say people would have expected it to be a lot higher now on the back of those cuts. But whether or not the demand is just not there at the moment, which might be related to a lot of economies struggling and people are sort of pulling in the reins somewhat.
Well, yeah, I mean, you've only got so much money. If you're fully tapped out, credit card debt is at all-time high. If you haven't got the money, you don't go out in the car and you don't drive and you stay at home, and it's a different manner as far as expenditure. And I think young ones are probably realising that more than anyone, because they've never been through a recession like this. They'd be going, what the hell's going on here? Hasn't started yet.
That's right. And they probably haven't seen interest rates where they are as well. They've been in a zero interest rate environment for such a long time.
Yeah.
That's not the normal.
No, it's not. No, I mean, you and I remember back to the 17s and 18s and 19s they paid here in the late 80s and early 90s. Businesses, it was bleak.
Brutal, certainly was.
Yeah.
I think where we are now with interest rates is probably closer to the all-time average, really.
Yes.
So, and I think most central banks, even though they could go up slightly, come down slightly, I don't think they're going to fluctuate massively either way, unless there's some
black swan event,
completely out of the blue, which would affect that. But I think, I don't think any central bank wants zero interest rates again. No,
that free money or negative like the Swiss and the Japanese. So yeah, that's right. And they've got to be careful where they are, because if you enter that stagflationary period, that's going to be very, very tough for all of economies moving forward. I mean, we're probably a little bit blessed here, but these big economies like the US, and naturally you look at Eurozone, they're all export-driven economies, aren't they?
Yeah, that's right. So, yeah, interesting times ahead.
I want to see Friday sales, how they perform, Black Friday, because Thanksgiving Thursday and Friday, and we'll be able to map that next week to see consumer behaviour. That tells you a lot, consumer. Resilience or reluctance?
Yeah, it might depend on the size of the discount, mightn't it? So.
Correct. Yeah.
Maybe they put a bit more on the discount this year. So.
Well, I mean, you've got to entice.
Yeah, that's right. So, but it's a big, that Black Friday it's a big event these days. You see it all in you go online. It's just advertised everywhere at the moment.
Yes.
So, yeah.
Well, we'll examine those numbers. We'll pull them apart, and hopefully we've got some data to share with everyone next Tuesday. We'll just wait and see.
Good stuff. All right, Pete. Thanks again.
Good to see you, Andrew.
See you next week.
Thank you.
And that's the XM.com weekly market update.